All right, let's talk about Palantir. It's one of the most debated stocks on the market, and for good reason. On one hand, you have this AI powerhouse that seems to be doing everything right. But on the other, you have a stock that has investors sharply, and I mean really sharply, divided. Just look at this number. The company recently posted a mind-blowing 137% year-over-year growth in its U.S. commercial revenue. I mean, come on. That's the kind of explosive growth investors dream about. It's a massive signal that their product is absolutely crushing it in the market. But here's where the story gets weird. In the days right after this amazing news broke, the market didn't celebrate. Instead, it wiped a staggering $40 billion off the company's value. Think about that. A massive sell-off right after a blowout quarter.
So what is going on here? That's the central paradox we're digging into today. How does a perfect report card lead to this kind of punishment? We're going to investigate that very question by looking at two powerful opposing forces locked in a brutal tug-of-war over Palantir's future.
Okay, first up, the bull case. Let's build the argument for why so many people are incredibly optimistic. And frankly, it all starts with some absolutely spectacular performance numbers. It's the story of a company hitting its stride at the exact right moment. Now, what's really fascinating here isn't just the growth, it's the acceleration. That 70% jump in overall revenue is fantastic, don't get me wrong, but that 137% number in the US commercial space, that's the jaw-dropper. It shows Palantir is conquering the corporate world at a breathtaking speed, and their guidance for next year shows they think this is just getting started.
For the bulls, this isn't just about one good quarter. They see this as hard evidence that a huge shift is happening. The argument is that Palantir is becoming the essential AI operating system for big business. Companies aren't just kicking the tires anymore, they're building their entire AI strategy on top of Palantir's platform, creating a massive competitive advantage, a moat that gets wider every day. And you can see their strategy playing out perfectly. On one side, they're locking in these huge long-term deals with industrial giants like Airbus, making themselves indispensable for years. On the other side, they're getting even deeper into their government and defense roots, getting critical authorizations that let them operate right on the front lines.
So if you were to grade the bull arguments, they're pretty much straight A's. The accelerating growth, that's a 5 out of 5, no question. The idea that they're causing a structural market shift, also a 5 out of 5. This isn't just hype, it's backed up by major contracts and hard data. But that's only half the story, right? So let's flip the coin. Let's look at the other side of the trade and see how this perfect picture gets torn apart by a completely different narrative.
You see, despite the flawless execution, a powerful counter-argument roared to life right after the earnings report. It says, it doesn't matter how great the company is, the stock price itself is just totally disconnected from reality. And this argument got a huge boost from one of the most famous skeptics in all of finance.
Yep, that's Michael Burry, the guy from The Big Short. He dropped a massive 10,000-word thesis arguing the stock was dangerously overvalued, caught up in the AI hype machine, and was even showing a classic bearish chart pattern that often signals a big drop is coming. When a voice like that speaks, you can bet the market listens.
The bear's central weapon here is valuation, specifically the price-to-sales ratio. Now, even after that $40 billion drop, Palantir was still trading at 74 times its annual revenue. For bears, a number like that isn't just a yellow flag. It's a giant, flashing, neon red sign that screams bubble. And it's not just that one number. The bears are pointing to other warning signs, too. You've got insiders selling off millions of dollars in stock, which never looks great. You've got a ton of people in the options market betting the stock will go down. And you've got these ongoing reputational issues that could cause problems down the line. To a bear, these are all cracks in that perfect bull story. So this brings us to the ultimate conflict, the heart of the $40 billion paradox. It's Palantir's incredible, undeniable growth crashing headfirst into the immense force of financial gravity, its sky-high valuation. You can really boil this entire debate down to these two competing ideas. On the left, you've got a company executing at the highest possible level with growth that's actually speeding up. And on the right, you have a valuation that many just believe is unsustainable, maybe inflated by all the hype around AI. And this right here is the key. When you put the absolute strongest arguments from both sides on the table, you get a perfect deadlock. The bull case, built on that verifiable accelerating growth, that's a 5 out of 5. It's real. But the bear case, centered on that unsustainable valuation, that's also a 5 out of 5. It is a fundamental stalemate. And that's exactly where we are. The market is caught in that classic paradox, an unstoppable force meeting an immovable object. The force is Palantir's flawless execution in this AI revolution. The object is historical valuation metrics and deep market skepticism. One side is looking at the future, the other is anchored to the present. Ultimately, this all leaves us with that $40 billion question. Is Palantir's crazy valuation simply the price you have to pay to own a piece of the future of artificial intelligence? Or is that massive sell-off just a warning shot, the first echo of a bubble starting to burst? The answer to that is going to define Palantir's next chapter.